Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing mixed markets around the world this morning. Our futures have gone from negative to positive after the European Central Bank cut rates to a new record low. And judging from the market's reaction, Scott, it looks like this was a surprise. Would you say so?
I actually thought that that's what the market was expecting, but for such a turnaround in the futures, I guess not, because they've also had some stronger reports come out. So they figured they might not have had to cut rates. So with that being said, there's still a lot of easy money out there, and I guess that's going to try and keep growth out there. And now you're seeing new highs in our futures. I feel like we've all been, a little bit lulled to sleep with some of the headlines of the new issues potentially coming out. But, these type of things also matter, as well as GDP and some other things we'll get into later. But as far as the SPX, look at it now. You see the chart, right here on the screen. You will see that once it does come up, that we hovered right near 2013 highs. Okay, you look at this trend, the trend has been strong ever since that red dog reversal in November, following suit. The most recent time that it got tested was into the government shutdown, as well as the potential of the debt ceiling, but that didn't amount to much, and now here we are. So with that being said, today, this is what you watch out for. We're opening above 1775 in the SPX. Can we stay above there is the question. Will it be a gap and go type day, which will definitely continue this pain type trade, this melt up, this race for performance, which we've been seeing all year long? Or do they sell into it, reverse it, and then give us a signal that potentially we could have a little bit of a rest, and some money managers might keep their job as they're well behind the eight ball. So every time we go up another percent or so, they're feeling the heat if they're underperforming.
Right. Well, and meanwhile, also taking up a ton of our focus, of course, is Twitter. It's a holiday of sorts around here. It's Twitter Day. We have the official IPO today, and of course, everyone wants to know what to do today and what to do within the next few days.
Everyone's going to talk, and everyone's going to make their projections on where it's going to open, how it's going to perform, what it could potentially be like, but nobody truly knows. You could have plan A, B, and C in your head, and that's it. For us, what we do here is we measure the art of the first day. We measure to see if supply and demand meet, where more demand could actually meet, to give it a nice first day trade. Because you know that if it's priced now at 26, up from the 17 to 20 range, up above the 23 to 25, it makes it a little bit harder for it to continue. So depending on where they open this thing up will be determined, and then we'll figure out whether or not we could actually make a trade today for an opportunity for cash flow into potentially tomorrow, or does it become a disaster because it's overpriced and there's not enough demand because they open it too high, which could create the Facebook effect versus the LinkedIn effect, which was a nice IPO with opportunities for everyone from the get-go.
Right. And speaking of Facebook and LinkedIn, Twitter's behavior today could likely affect a lot of other names within the groups. Let's check in on some social media stocks before the Twitter IPO and talk about Facebook. Still stuck in a downtrend and failed to close back above its 8 and 21 day yesterday.
Well, you know what, I wouldn't quite say a downtrend, but it has been, since earnings, trying to figure out if it could hold higher. Stocks had an unbelievable move. You talk about the first day there. Let's just take a quick look. You go to Facebook, you go to when it came public. Look at that first day. So this is that first day of Facebook in trading. Opened up, hit 44, closed on the lows. That tells you this was in a void the first day. Not enough demand to eat up that supply. And then what happened next? A second down day. So if you bought it at 42, you might not have been able to hold it as it went down below 30. So with that being said, though, look at this nice pattern that Facebook developed, this nice cup and handle pattern with the descending trend line. Then finally, after a few quarters, they figured out that they could monetize search, and then that's when you had that gap up 2 quarters ago, and since then, nice trend to the upside. So the question is, after last quarter, even though it was strong, does it have enough power to stay above this lofty level? Here's your high, here's where it's coming into this trend line. So sometimes, on a day like Twitter, you'll see what the next move is here. So I would say above 50.45 could be good to the upside, but if it starts to break below the prior low here of about 47.5, it could correct more and just retrace some of this move because it has doubled in the past 3 months.
And what levels would you say you're watching in LinkedIn today, which slipped another about 1.7% yesterday?
Well, this was actually a good deal that day. It opened up at 90, went to 92, went to 88, back to 90, absorbed that trade, and then went to 115 that day. So it gave you a nice trade, and then it actually didn't wait, I think, a year and a half like Facebook had to do. So you look here at LinkedIn, here was its first day, here was that accumulation pattern, and then here was this cup and handle breakout to the upside. So the question now is, does it need to retrace more? Because sometimes these growth stocks, they do pull in and have a bigger retracement than in the past. And this one hasn't really had, a big retracement. This was the last quarter. Remember last time they announced here, it wasn't enough, corrected down to the 100-day and then went again. And this quarter didn't seem like it was enough again, and now it's creating a bear type flag. So with that being said, if Twitter opens up too high, like at 40 or 44, and closes in the 30s, you might see some pressure on these. And right now, this short-term pattern is what you call a bear flag. Here's your pull, here's your flag, and if it starts getting below yesterday's low of 220, there's no reason why I can't see it move down towards the 200 area, which still, it's up a double from where it was, but it just goes to show you that entries and exits matter, and you have to know your time frame.
Right, and one name that doesn't need any added pressure is Yelp. Ugly engulfing bar there yesterday, dropped more than 6% to break below the 8 and 21 day. So what are the levels to watch there today?
This one also, great run, great spot to be for the last few months, but with entries and exits mattering, depending on your time frame, it does look a little vulnerable here. It closed on the lows yesterday. Actually, the day before was a good trade. Above 70, looked clean, and then all of a sudden yesterday, out of nowhere, boom. It took a lot of it back, and you never want to see that on a short-term basis. So you look here at Yelp, you'll see that here was that, the breakout above 70, which we were looking at. I actually just took it as a cash flow trade, which I'm doing with a lot of my things. I've tightened up my time frame because I've been a little lost in the last few sessions with the, sector rotation. But anyway, here's that engulfing bar right into the 50-day. If it were to break below yesterday's low of 66.09 and not reclaim it, here's your next level of support. So watch that as a pivot point for both longs and shorts.
What about Zynga? Do you see an opportunity there?
People are trying to look at this. Even I've tried it a few times. It's because it's been, hovering between like 3 and 390 for so many months. You'd think that some funds out there are accumulating it, and at some point, all the new management might be able to get something going here. But at this point, it's still not compelling. If you want to hold a little bit, that's fine. But you look at the chart here of Zynga, you will see, it's been in this lower range for quite some time now. Actually, this was probably one of the worst IPOs ever. This is actually, it ran a little bit into the Facebook hype. But look at this shooting star here. That was your telltale that it was over. And then obviously when it broke this trend, it broke this support, and then broke that support. So you have many ways out of this thing. And if you did get out of it, you look at the size of this accumulation in this lower level. This is a long time coming. So you take an even closer look here, and you will see that it tried to get up after earnings and didn't have enough power. It failed above 4. So in order for you to even think about this thing getting in motion, it's got to start getting above 385-ish and closing there with some volume to get more interesting.
All right, coming up, we're going to go in the trenches with mega cap tech stocks that are getting some attention. But first, a quick commercial break. We'll be right back.
I'm sure you've heard probably once or twice that Twitter is hitting the initial public offering market. My name is Scott Redler. Some know me as Red Dog. If you follow me on Twitter, at RedDogT3Live. With Twitter coming public, it could be one of the most exciting trading days of the year. You've heard everything about Facebook and how it came out the first day and it was a disaster. You've heard that LinkedIn was a success. You have to have a plan to know what to look for. Here at T3, we talk about the art of the first day of an initial public offering. We measure the supply and demand of that new issue when it hits the tape. Whether or not you should be involved in the first 5 minutes, 15 minutes, hour, or whether you have to wait. Let us help you sift through the noise here on our trading floor, within our virtual trading floor, because you're not going to find me on Twitter on Thursday and Friday. You're going to have to follow me here on the virtual trading floor because I'm not going to be on Twitter. Go to t3live.com, sign up for a 7-day free trial, tune in on IPO day, witness what those in our community see every single day. When Twitter comes public, I'd love to see you trading right next to me. Hope to see you there.
We're back and going in the trenches with mega cap tech stocks that are getting some attention. Stocks like Microsoft yesterday soared on reports that the company has narrowed its search for a CEO. It soared 4.2% and put in a new all-time high. So do you think we'll be able to keep momentum here intact today?
When we started the year, we talked about the big consolidation of Microsoft and the potential that finally, it could get going. It's been such a long time. They have a lot of cash and there's a lot of liquidity. They give a dividend. And it had so many starts and stops and stops and starts. And, finally, it got going again. People left it for dead when, the CEO said that he was leaving. It's funny because, we talk about trading remotely, this and that. You can't use a laptop and do that with a lot of things on Apple. So I actually had to go out and get a Toshiba notebook that ran Microsoft, and then as I was traveling around, Russia, I saw everyone having a Nokia Microsoft. So there are products out there. It's not the high-end product like an Apple, and it's not left for dead like BlackBerry, but there is some stuff going on there. So you look at the chart, last thing you could have seen here on Microsoft was this last gap up, right? Gapped up above a prior point, never filled that gap, went sideways above it, and then here is your day 1, day 2, day 3. I would not be buying Microsoft here today. If you're looking for some type of tradable action, here is yesterday's pivot. If it's up with the futures above 38.22, maybe you even look for a cute little fade where you sell a little bit, breaks below this. But at this point, hard to chase Microsoft on 3-up days. It's hard to make money in Microsoft any other day, so don't do it. Try and chase it up here.
Well, speaking of your whole day 1, day 2, day 3 strategy, Cisco just had a nice 2-day move, broke out on Tuesday, had nice follow through yesterday. Would you leave it alone today?
This one at least looks like there's a little bit more room. If they're really going after these, it does have a dividend. I know that they do a lot of work in Europe, which is supposed to be getting a little bit better as well, besides the public sector. So you look here, and you're getting something not at highs like Microsoft, but breaking a small downtrend. So if you wanted to, be involved in Cisco, we were talking about it on the virtual trading floor the other day when it looked good. I still think you could see this, okay? So if you're looking for some type of trade, you could see 24 to 24.50, and then, you have this leftover gap. So at this point, it's back in the game. Let it stay. As long as it stays above 23, I think you could try and buy on dips, and it could work its way higher.
And then Oracle had a nice breakout yesterday, registered 1.7%. So would you say that maybe we could nibble today?
Yeah, this one, it would have been better with the futures down. Now with the futures up,
right,
it's probably up a little bit, so you won't be able to get as much movement. But yesterday, Oracle was something we were talking about too, where it was breaking a downtrend, where you're not buying it at 52-week highs like Microsoft just made. So maybe if these are going to follow, there's room here. You look at this, you look at this chart. This is the peak that it had here in Oracle. Lower high, just breaking above it. So now this was just say your day 1. So I do think at some point, if they want to keep this mega cap trend in, it's in the game also. So you don't have to be in each one of these, but maybe you buy some and just buy at Versal level and let it try and work out, because as far as trading them, they're very thick and they don't move as fast as the names we usually trade. So just don't get too frustrated if it doesn't move as fast as normal.
Right. Well, Intel also yesterday had a nice reversal, logged in almost a 1% gain and broke above and closed above the 8 and 21 day. So maybe we could get a little piece of this action today too.
Yeah, the semis they're trying to be a little stronger. If, you look here, I don't think the pattern is as conducive as the other ones that I showed you, but I guess if it were to get above this area, it would have a little bit of a cleaner action. You know what? I would say make sure it stays above this 2380-ish area. I don't think this is as clean. I would kind of avoid Intel unless you really need semi exposure. I think maybe for semis, if you look at AMAT's been hovering up here. Holding. We've been trying to play this a few different times, but this actually looks like if semis want to get going, I think this is a much cleaner pattern. It's got to get above 1815.
All right, let's do some quick hits here. Check in on some big names like Apple. What are the levels you'll be watching here today?
This yesterday was off, but so is all high beta tech. So I think as long as it stays above 515, it's got a chance to break above 528. But it seems like it's just not ready yet. You look at the chart real quickly. We've had a lot of nice trades in Apple since 2 quarters ago on that big gap that never got filled and went up to resistance, and now it's just hovering here. So stay above 515. If it starts to get above 528, I think traders will start talking about it a little bit more. Do you see potential opportunity in Tesla today? Tesla has been a stock that we've been trading for a long time now. The trend was strong. The trend broke. We do not take stock into earnings, so that was a reason why, because look what could happen. It was down 25 points. So as a trader, you never need to, don't want to blow up. So what we do is we take options because it's risk is premium paid. I did take a call type strategy into it, and I lost my option money, but you know what, who cares? There was opportunity to make money short it yesterday, trading it after the earnings. And now it looks as if it's going to be in the penalty box. Okay, some guys probably took it home short last night for some follow-through. Here was a trend that broke. Remember when the market made new highs and this didn't for the first time? So for the first time, Tesla did not have leadership. So that gave you a signal to get out of the way. And then right here, it actually rallied back. So you could have been out of it around 175 prior to the earnings if you didn't do it. So anyway, here's yesterday's low. This is your pivot. 146.35. If it breaks below 146.35 and doesn't reclaim it, next level here comes all the way down to about 135. So this stock has changed its composure. Now just take trades on a short-term basis instead of trying to stick with it.
What about Google? Key levels to know there today?
Google and Amazon were the two stocks that had good earnings, gapped up, nice gap and goes, but they've been just digesting since. So the question is, can they get going again? So you look here at Google, and you'll see that here is your big gap up after earnings, and we talked about this 7-month base that was right here. That's why this was one of the most successful option plays we did of the earnings quarter, where we took calls and you could have made 8-9 times your money, which is what I did, which helped me with some of these bad earnings that I've just done this week. But anyway, here's a gap up. This was a nice trade. It's getting very tight here, so I'd say trade it long against 1,015, and if it starts breaking back above 1,030, then it can make new 2013 highs. And just real quickly, same thing goes for Amazon. Here's your big earnings gap. It's trying to hold in there. If we open up and sell off and it starts breaking below this 354, you're going to have to take some care there. So it's just been choppy here as it absorbs unless the moving averages catch up. But we're in the midst of a little bit of an identity crisis in the market where you have consumer staples making highs, you have a lot of these conservative yield-producing stocks doing better, and then you have the growth arenas that look like they're trading lower because I guess just like the ECB cutting, people are still worried about growth. So, that could mean that, we're going to have easy money here for a while as well.
Right. Well, and speaking of that, we've been so wrapped up in the Twitter IPO that we haven't been talking as much about the fact that we have the jobs report tomorrow. That's a big deal.
Yeah, definitely. It's, especially since we didn't see some news, we didn't see some data because of the government shutdown. So people want to see what kind of report do we get tomorrow. Are we going to get a stronger report, which might mean that tapering could be back on sooner? I think most of the street's comfortable now with March. Or do we get a weaker report where we're like, wow, things are really that bad, and it goes out even further? So at this point, I don't think the street's going to be so hyper-focused on tomorrow, but you have to put that into the equation, alongside GDP and figure out where we go from here. But at this point, bad news has been good news, and sometimes good news is good news, but overall the market's been just trending higher, and don't fight it until it really shows you that it's due for a rest, which we're seeing faulty signals, but we've seen that before. I wouldn't have short on the brain. What I'm going to do is just tactically continue to take trades, not have too much risk exposure, have 1 foot in the door, 1 foot out the door, because we're up about 24% or so for the S&P. Yes, we could be up 28%, but you don't have to be all in trying to squeeze the juice out of this last move if there is one.
And remind everybody to join you on the virtual trading floor, right, today for the Twitter IPO.
Yes, I will not be on Twitter tweeting about it or anything else that I'm doing. So if you want to tune in and see what we're doing on the virtual trading floor live as it opens up, just sign up for a free trial. Go to t3live.com, sign up for 7 days. You'll actually even be able to see tomorrow and a little bit of next week. A lot of people who signed up on Monday or Tuesday from last weekend, they've gotten to see a lot of the action that we've been involved in, a lot of the trades we put on that we take off. Sometimes we've seen some news hit and saw that they were trading well and they created opportunities. So all in all, the virtual trading floor is a great vehicle for you to have like a big brother and help you through the day-to-day, especially if you're a professional trader. So why not?
Why not? And with that said, happy trading, everybody. Have a great day.